Good evening everyone and welcome back to another video on how to use the ICT concepts and how to read the markets during the London session. And today we will be analyzing the gold, and this is on 26th of February. And this is the London session. As you can see in my Discord group, we were expecting a higher prices on gold on the London session for this day, and anticipated that the price would reacted more to the order blocks, which is here as you can see, rather than the fair value gaps or the liquidity pools, which is the sell side or the buy sides. So let's dive into the chart and break down why a price action tends to respect the order blocks, especially on Wednesdays. So first, let's go back to Monday trading hours. So on Monday, as you can see, the prices reacted more to the fair value gaps and to the sell side and the buy side liquidities, which is the liquidity pools. As you can see, the prices traded into this fair value gap and then start to go higher to the buy side, and taking this buy side and it traded into this 4-hour fair value gap. And you can understand that on Monday we saw how the price went to the fair value gaps and then to the buy side, or which are the liquidity pools. But weirdly, on Wednesdays, when the markets already reacted to the fair value gaps and the liquidity pools, on Monday it starts to respect the order blocks much more. And this is why many traders make profits on Mondays and Tuesdays and tend to lose them in Wednesdays. Now, looking back at 26th of February, which is the Wednesday, when the markets already reacted to the fair value gaps on Monday, I mentioned in my Discord group that we wanted to see the price reacted more to the order blocks and then target the higher prices, which is here. Since it was Wednesday and we already saw Monday's reaction, we saw how they went to the liquidity pools and the fair value gaps. And also, from my experience, 70% of the time, when you see a downward move like that, everyone tends to short. But the markets often goes against what most traders expect. And this is why I strongly believe in the ICT concepts, if you truly understand them and the logic behind them. And believe me, these concepts are not easy to learn. You need to spend a lot of time watching the charts and observing price action during the key sessions, like the London session and the New York session, and taking notes and backtesting everything the ICT teaches. And I can guarantee that the patterns he explained in the markets almost happen every single day. If you don't believe me, go back and check the 5th of March and see how the price respected the order blocks much more, and how the price delivered. Now let's go back to the 1 minute time frame and analyze how price played out. We are looking on the 1 minute time frame, and this is the beginning of the London session, which is 2 a.m. in New York local time. And we saw at the beginning of the London session the price did traded into this order block and then started to go and trading to the higher prices. And as you can see, we all know after closing above a downtrend or down close candles, as you can see here, we can call it, as ICT called it, which is a change in the state of delivery, right? And since it is Wednesdays, and I do expect that the prices would respect more the order blocks, so these down close candles become as an order block. And as you can see, the prices did came back to the order block, but they didn't fully respect it. And let's see about the middle line and see where did the prices went. So as you can see, the prices did traded into the middle line of the order block, and the wick just tapped into an old order block, which is on the 15-minute time frame. And what I have noticed that, let's check what was the lowest point that this candle went. As you can see, we are here and we want to look at this one, this number, right? This number, which is 2906.83. It went to the lowest point for this candle. But let's go check the open of this candle, which we called it the order block. The open, we want to see this number, alright? This number. As you can see, it is 2906.83. This is an exact reaction from that candle. Going back to the 1 minute time frame, as you can see, the prices after tapping into this order block and then started to move higher and higher and higher and taking this buy side, and then as we expected already to go to the order block, which is on the 15 minute time frame. We already knew it from the 15 minute, and that is why ICT concepts are most logical way to analyze the markets. And if you questioned yourself why did the prices went to the opening of that 15 minute candlestick, when you start to use the order blocks, you have to understand that in my experience, order blocks, you use them when the market's in a high manipulated, let's say, phase. That is why you have to take the lowest point the price can go to, and that is why the price traded into this, the opening price of the 15 minute candle, and then started to go to the higher prices. And as you can see, yes, the prices did respect the liquidity pools, but in general the prices at this point were on Wednesdays more likely to respect the order blocks much more. And that's it for today. I hope you find it insightful. See you in the next video.